Welcome to Market Buzz. I'm Greg Schnell, the Canadian technician and host of the Market Buzz. Each show we do a deep dive into different industries using weekly charts to see what is happening on a long timeline. Please follow me on Twitter at Schnell Investor, and you can also find my blogs on ospreystrategic.org as well as StockCharts.com. So, are the metals on the move? I think they're about to be. And there's a reason for my optimism, but I want to share that with you in the charts today. So let's get into it. What are we going to cover off? Well, first of all, the markets continue to soften. We're continuing to test and dipping a little bit below the June lows. So that makes it a little bit awkward here. Some large cap names like Tesla pushing back down here. Apple and Tesla both have had a rough couple of weeks. So that looks hard. And those are holding the indexes down. But I do want to look at metals specifically as part of my theme on the energy crisis going forward. If you're not aware of my theme on that, you can always go over to ospreystrategic.org and check out our 1 month at $7 for an offering, or the best deal that we offer is the Osprey Strategic Package for 1 year at $860, and that'll give you all kinds of insights over the year and get a feel for how we watch the markets move. What you'd also receive there is an award-winning technical analysis, weekly newsletter, weekly video, monthly recorded conference call, trade setups every day, and a hint at some of the things that we have called the SSIH, the Schnell Strength Indexes, and those give us a method of investing in the market. Let's head over to the charts, and the chart I want to start with, here's the indexes. So I'm recording this on Tuesday, roughly a half hour before market close. And you can see we wobbled, we were opened the day gap down, pushed back up, tried to make it through the prior day's highs, failed, came back down and are testing the low right now. So we've got a pretty wobbly situation here as we try to take this out. Looking on the bigger picture, for the SPY, we're down below the June lows. Then September 30th, we closed right on the lows. Now we're testing that September 30th low. And again, here we have the June low from QQQ, and we're pushing down here. What I'd obviously like to see is we could turn and burn higher. We get some more core inflation data later on this week, and I think those two pieces of information could potentially cause a turning point for the charts. But we're up against the yield situation, the U.S. dollar situation. We got some Bank of England issues, the Russia-Ukraine war. So there's definitely some reasons to have pressure in the market. On the weekly chart, I would say one thing is going on here. If you look at the PPO pattern that we see on the weekly, we also have that same pattern on the daily. And what we'd like to see is, essentially we saw this back here where we had a downtrend, we wobble, and then we try to make a run up. In this case, we ran up into June, pulled back, and then took off. And so it was that higher low that we were looking for. Well, maybe we get this on a shorter time frame when we make this higher low. Same thing here. Could we make a higher low on our MACD right here while we make a lower low in price and push up? That would give us some of the clues that perhaps we've seen the worst of this market bottom, and we're going to be on our way higher. I will say from the point and figure view, there's nothing really giving us a whole bunch of confidence. The QQQ has clearly broken below support. The S&P 500 is below June support and is trying to hold close enough to this late September level. It wouldn't take much. We're currently at 355. If we touch 357, if we touch 355.14, then we're going to put another circle on here, and it's going to be the continuation of the downtrend, which isn't exactly what we want to see. So let's get into the material sectors. I want to do two things here. So first of all, I've created a chart list that you can do that, and you can go to the scan engine and literally download everything for the materials area of the market. But what I like to do is I like to sort it by something, and in this case I've sorted it by scooter ranking. So if I just refresh this page here, so what we've got is a list of companies, and again, this is different types of materials, so it could be gold, copper, lithium, whatever, all of these different types of corporations in there. We're going to sort it by scooter ranking, and again, we could have the worst first or the best first. Higher scooter ranking is better. So I want to be very aware of which way I'm sorting this, but you'd see it on the charts too. Now, from this, when you're in, you have to be in summary mode to do this, but go down to the bottom of the page. So I use function and the arrow key, and that takes me to the bottom. And there's number in sorted order. And by doing this, it's going to put a little number in front of all of these in the order that's the same as the scooter ranking. And then when we go to look at these, so let's just pick whatever chart book or gallery view, ChartList, any one of these. What's going to happen is it's going to put the charts in the order of the strongest scooter ranking first. So that's what assigning this number to it does. So again, it's very easy. And then to remove that, it's just as easy. You go to edit list, you select all the charts, and then click remove numbers. Thought when I highlighted this that would come up, but anyway, this is the remove numbers, and it says, are you sure you want to remove numbers from the saved list? It's going to take this front portion off each one of these. So again, this isn't anything permanent. You could turn it on and turn it off and take it off. So now we're going to go back and we're going to go to summary one more time. Click on the scooter ranking, scroll to the bottom of the page and hit number on sorted order. And guess what? We just put the numbers back on. So it's easy to turn on and off. It's less than a minute and just allows you to look at the best stuff first. So I've got these charts set up here in this chart list. And one of the things that, considering the market is making new 52-week lows, we're sitting up here in the top right-hand corner. So when you think about relative performance or relative outperformance, what does that mean? Well, when the market goes down and these stocks didn't go down, that's relative outperformance. Now, typically, why didn't they go down means that investors are less likely to sell them because they think the upside is still yet to come on these stocks, and so they don't sell them off. Whereas they've been selling off Apple and Tesla, they've been holding on to these material stocks. And why is that? Because we've got this energy crisis coming at us, and we need copper, aluminum, steel, lithium, helium, carbon sequestration companies that design carbon capture systems, and we need a variety, solar and wind companies. All of these are all participants in this energy crisis model. And so I've specifically gone to the materials sector charts here. But if you would like to see my energy crisis presentation that I did for StockCharts, I think you can buy a post-presentation version of the recordings of everything that we recorded at ChartCon, and if so, then you can go there. If not, you can go try a $7 membership over at Greg Schnell or ospreystrategic.org, and in there, I'll make sure that if you read the last few newsletters, you'll see that I've got links into these chart lists that have materials and oil stocks and things that are getting ready to move higher on the back of this energy crisis that's all around us. So here's Albermarle, and again, I'm going to just change my view to be this chart list version, and I really like this continuous scrolling. It's a nice option. Now, what do we want to see in a chart? The hard part for most people is just understanding, if you're new, understanding what you want to see. So here is the weekly chart for the S&P, and notice what you see here, almost no red bars over and over and over. Now it's a plethora of red bars since the beginning of the year, and the market continues to drift lower, making it very, very difficult for investors. So what happens is your indicators start to fail, and in this case, here's the scooter ranking up at the top. I like it when it's in the top 75%, and I don't like it when it's in the bottom. If your full stochastic stays up above 80, that's pretty strong. You want your PPO to be in positive territory, and when it starts to dip below 2%, my good friend Vernon came up with that place to look. So anyway, with that, this started to roll down. and break down them. And now it's been living below zero. And what we want to watch for, obviously, is when it finally turns up and starts to get back up. Once it gets to positive territory, you just want to be involved. You don't have to wait that long. Obviously, the bounce off zero, so from here to here, was a pretty big rise that you would have liked to have caught. Pretty much the whole 35% drop in the indexes in 2020 happened, and by the time June and July came, you had almost gained all that back, which would have been a 50% increase. So it's quite meaningful to be in near the turns. Okay, let's go back and look at this chart again for Albermarle. And what we see here is the chart has its scooter ranking up at the top. It's outperforming the S&P 500. That's very bullish. The full stochastic is hovering up near the top half. We'd like it to stay above 50. And typically what you see is when you're in a bull market, you're above 50. And when you're in a bear market, you're below 50 on this weekly full stochastic. And here's the same thing on the PPO. Again, when you're above zero, that's bullish. When it gets below 2%, that's gives you a bit of a pullback here. That's not what we want. The 2% works better for indexes than it does for individual stocks. But nonetheless, what we're looking at here is we've got a series of lower highs in momentum. And now if we started the new energy rush, I would expect this to break to the upside, unless the whole economy bottoms out and we go into some sort of bigger depression or something where people aren't buying anything. That might change the chart, but I'm expecting us to stay on the top half of this zero line meaningfully and make some serious money. So that's how to read the indicators I've got on this page. Now, when we look through these companies, we've got different ways to go here. This is specialty chemicals, so they're in the materials space. But what you see is the the scooter ranking is doing very, very well. And this stock is really outperforming the S&P 500. And any sort of break above this $100 level is going to be a big step change. So you'll see a stock come up and wander sideways for a couple of years and then catches wind and it takes off to the upside. I have no idea what they supply, but if this stock starts to break through $100, I think that gets pretty interesting. Owings, Illinois. So this is, it hasn't done anything all year, but that's a lot better than failing, like the indexes. And you can see that this is up around a 90% scooter ranking, one of the highest levels it's had. But in general, the stock doesn't really have that sort of breakout volume breakout chart that I'm looking for. Nowhere in the last couple of years has it really got too exciting. I guess the move from 5 to 10 would have been pretty good, but a lot of stocks in 2020 did that. Sociedad, SQM is an interesting one. This stock had been on quite a run from 40 to 113 as little as a few weeks ago. It's a big lithium producer, so if all of a sudden the lithium stocks, which have been taking a little bit of time off, you can't just use the lithium ETF because Tesla is in that ETF, and obviously if Tesla pulls down, then then that lithium ETF price starts to drop. Well, these stocks that are in the material sector here are there. They're below the 10-week moving average, but above the 40-week moving average. The PPO is still in positive territory. I think, again, if the overall economy can start to push back up, these stocks should do pretty well. And here's your scooter ranking. Since the beginning of the year, staying above 75, telling you it was one of the best stocks around. CF Industries, you can see back in 2020, it had a really low scooter ranking and then it rallied up, had a pullback here from June to September, and then started to get on its way September 2021. Just scanning for something simple like crossing of the scooter ranking, crossing above 75 can put you in the know for some of these stocks starting to make a nice move. There is an uptrend here in relative strength with the S&P 500, and again, that looks pretty good to me. Now, what you'll notice is the way I've sorted all of these stocks. I've got all kinds of things mixed in here, but we could actually, as an example, sort by materials, say gold or precious metals or industrial metals, and then chemical companies, and we could sort them separately, and then we could sort the scooter ranking within each one of those. So if you don't like the way this list is sorted, we could go back and change that. But but again, the idea is to show you what's working, and all of these things with a scooter ranking up above 75 in this material space have all been very good. Here's another lithium name with the scooter ranking up high. The one thing I would say on this chart, it really didn't get going for the last couple of years. Recently started to, literally took out a prior high and started to fail since then. Really not a nice chart. Steel Dynamics sideways for 18 months here. Chart trying to push up, full stochastic starting to turn, relative strength broke out to a new high, and the PPO has been staying above zero. Again, I think if the oil patch has to start picking up activity and we got to start building more wind and solar, then steel is a major part of the production. Okay, Mercer International. They're in the paper business. Not really going in with my energy structure, so we'll just leave that one alone. Here's Commercial Metals in the steel sector. Charts had a nice quiet grind higher to it. Made its high back in April, a little bit of a lower high in August. Rolled back down, and now it's trying to get back through both moving averages. PPO looks like it wants to make a higher low right here above zero. That would be bullish. The next thing we'd obviously like to see is it to go on a nice big run like it did back in 2021. Allegheny Technologies, might be Allegheny. Anyway, steel industry, chart, pretty much bottom left to top right. And again, a lot of things have weakened over the last few weeks. What we want to look for is if these things are all going to start to turn up. I think they're going to have a nice fourth quarter if I'm right. And if they do start to ramp up, that would be a pretty good place to look. Another steel company, and the whole SLX ETF was up over 7% last week, so that was a pretty strong showing. This is another specialty chemicals, really been tilting down since the beginning of the year, so not really the chart we want. PPO is underwater. Wouldn't take much to get it back on the positive side, but again, just scanning for a scooter ranking moving above 75, a PPO either positive cross on a weekly chart or scanning for a move above zero. We'll give you some ideas of some stocks starting to break out. FMC, specialty chemicals, you can see relative strength has started to improve. So the stock really hasn't got above its August highs, but of course the indexes are going lower, so that's why this chart looks so much better, outperforming. Now, a couple of positive volume weeks coming in lately with a little bit of extra volume. That volume 2 weeks ago was the highest volume in 4 or 5 months, so somebody was interested in looking at it. The PPO is just turning up. It's gone positive, crossed its signal line. Wouldn't take much to start to shoot to the high side. Another steel company. Again, all of these charts are just getting set up, but these PPOs are just starting to turn up and kind of give us a renewed sense of push to the upside. Another container and packaging. All of the companies with regards to wood haven't done very well lately, as lumber has collapsed from, let's say, 1,800 down to 400. It recently touched down about $400, and so that's back to kind of near a 5-year resistance level, support resistance level that looks pretty good. I would say those lumber companies at the bottom of the range, and if they were going to start to turn up, that would also be good. It's not the purpose of today's conversation, but again, I got to pick something, and I would just say all of these materials look good. I'm not going to cover off the wood companies or the paper companies at the same time. So here's Yamana Gold, and again, this finally got above its 10-week moving average, really for the first time since April. There was a couple of brief stabs, held up for 1 week and gave it back the next. What we want to see here is, can it hold up? PPO looks like it's breaking a downsloping trend line and wants to start to turn higher. That would be a first clue for me that perhaps things were getting better. Alamos Gold, that looks pretty much sideways, so not really the stock we want. Another container and packaging company. Here's Coeur Mines. So you can see this big downtrend where we've been living below the 40-week moving average. We're trying to get back above it, and any sort of surge above $4 here on Coeur d'Alene, would change the chart from a real negative disposition to a positive one. Full stochastic moving above 50 for the first time since a year and a half ago or a year and a quarter ago. And look at the scooter ranking. It's basically telling you I'm awful, and all of a sudden we're at the highest level in a year and a half. any sort of break back up into this positive zone here, I think puts it on the map for a really good chart to start to watch. Again, what does the scooter ranking tell us? It's the percentage. So we take all of the price movements in the market, and then we compare who's got the fastest price movement going on. And typically what you see is companies that have better price performance. So let's say the S&P is going down. Probably 500 of those stocks are gently pushing down. You've got this stock pushing higher. So out of its peer group, it comparatively is moving better than the rest of the group. So we're watching for how the price action is, and then we try to rank the price action based on how far above the 200-day moving average it is, and above. There's 6 different parameters that we use, but essentially those types of things. Is it above the 150-day moving average, the 50-day moving average? Using those components, we rank all the stocks. And typically what you see is when the scooter ranking is above 75, they're probably in a bit of an uptrend, and that's a good place to look. Specialty chemicals, Vulcan Materials. So this one's been downtrending for quite a while. PPO is trying to make a higher low here and turn up and cross. That would be a nice entry if this could actually follow through. Be worth watching. The relative strength is at pretty much very close to the highs for the year. I'd like to see that break out and start to make 2-year highs going back just up above this line, just a little bit more. Air products and chemicals, I think this is going to be one of those important areas in the market where anything you build, you need the types of products these companies supply. So again, if they could start to turn up right around this 0 PPO, that would be a nice place to look to get back on board. Again, they've been struggling for a long time, but once this starts to improve, I think the chart can run pretty nicely if it can get going. Okay, that was specialty chemicals. So hopefully this is giving you an idea of just kind of how to go look through the different areas of the market. I wanted to show you how to structure the chart list. We could go back and do a little bit more work on that, but here's a uranium stock, and again, this one has been trending higher for quite a while. You can see the green line continues to trend higher, but price has been unable to break. This is roughly $30, $32, $31, so there's a lot of resistance right in here. And in order for Cameco to start making a higher high, everything would kind of have to change at the same time and push up. But the stock has held a scooter ranking up above 75. You can't really just use it as a buy-sell signal. But definitely when it starts from an oversold level and really starts to improve, that can help your investing strategy. Tech Resources, this is a company I own just for full disclosure, but this is a company that has all kinds of different metals. It's got zinc and copper. Metallurgical coal is another thing they do. I'm trying to think just off the top of my head of some of the others, but you get the idea. They're a broad-based mining company, and there's a downtrend line here, just sitting here. Any break above this 40-week moving average to me gets it going to new 3-month highs. That would probably look good. They have a new copper mine coming on in Chile around the end of this year or early 2023, and it's going to double their copper production. Well, if copper is in short supply, I think that's going to be a pretty important component. And let me just go get let's do it over here. So here is copper, and this is the copper miners, and we could just put the two charts side by side. But what you see is they've been uptrending since late September, briefly pulling back here on the copper miners for the last 3 or 4 days. The chart is still down in the bottom corner, but what I like is this PPO up right near 0, and what I want to see is this thing starts to break higher. When we look at it on the big picture, again, you've got a PPO trying to cross on the weekly chart, on the daily chart, and on the hourly. If all of these could start to thrust above this 0 level and get turned up, that would be nice. The weekly's got a ways to go to get up above 0, but we're building this tight sideways range, and I will say one of the things that was very interesting if you go back and look at 2009, one of the stocks that jumped to new 3-month highs on the shortly after the March lows was copper. And the reason that that makes it more interesting is if copper is going to start breaking to the upside and the overall market's starting to improve, we should see that health start to show up in the copper chart. Okay, so with that, hopefully I've given you some ideas for metals and mining. The big thing I just want to make sure that you're aware of is the market continues to soften. The large caps are definitely holding things down, but a look at metals suggests that there might be some nice companies in there to start working with. Thanks for taking the time to join me on Market Buzz. Market Buzz airs Wednesdays at 10:30 a.m. Eastern Time. You can also see the recordings on StockCharts TV or on ospreystrategic.org. Thanks, everybody. Bye-bye.
Hey guys, Dave Keller here with StockCharts.com. Thanks so much for watching our video. If you enjoyed it, and we hope you did, hit the like button right below. Also, we have so much new content every day. Consider subscribing to the channel. Just hit the subscribe button in the video or right below. Thanks for watching. Stay safe. Have a fantastic day.